How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on US dollar versus Japanese yen. As we can see, we got a higher swing low and going into this new Friday candle. It's currently right now 12:57 a.m. here in New York. I am very tired. I should be sleeping, but I'm here looking at the charts either way because my alert just went off for that 20-day IPDA look back high being ran out. So for those that know, we use IPDA look back data ranges, looking back 20, 40, and 60 bars. There's three quadrants, 20 bar increments. And we had expected this price to get ran out, and it did just now today. Now we're probably going to see this go up here. So the Japanese yen is still weak. That carry trade is very strong. The Bank of Japan just had the interest rate decision. They kept it the same. So the rates are still going to maintain low compared to the rest of the central banks around the world. The Feds still have a high rate, higher for longer. Supposedly there's going to be one cut maybe this year potentially, but I doubt maybe they don't cut at all this year. And the Feds are going to probably be one of the last or fewest central banks that actually start to change their monetary policy and start cutting rates to impact the fiat currency. So since the rates are higher for longer, dollar is more valuable. You're going to see other central banks start cutting rates. So the Bank of Canada, BOC, recently cut rates. So you think people are going to want to put their dollars into Canadian dollar versus the other banks that have a higher rate than it? No, they're not going to get into Canadian dollar. They're getting into those rates that have a higher yield. So right now the Feds have a higher yield for holding dollars, so dollars are being pulled back in. Price is still pushing higher. Seasonally, we knew that the DXY were going to be bullish for the month of June from the seasonal tendencies. We talked about that. And then we also saw that Japanese yen was most likely going to move sideways. And we said that because it was going to move sideways for the seasonal tendencies, other pairs would take advantage of that. So UJ and all the other yen crosses as well. So like if we look at AJ, very bullish, right? From the start of the year, from the start of May, from the beginning of the year, pretty much, it's bullish. And you can see it's very dynamic. Like this price action wants to move. You can tell this pair is not range bound versus other pairs. You see UJ, 2024, just dynamic, very bullish. CAD-J as well. Look at all the yen crosses, right? It's a carry trade because the yen is so weak. You're basically getting paid to sell the yen. Nobody should be owning the yen, depreciating so much. Look at how it's trending, right? These are pairs you want to trade. Look at the scope or the environment you see here. Price just creating higher swing lows, higher swing highs, false break, pulls back up, breaks a swing high, higher swing low. There goes trend, and this bullish trend, that's what it's going to look like over and over again. What we're seeing is not new. Look at this, man. GJ is pushing. Swiss J is pushing. These pairs are ready to move. You know why? Because of the interest rate differential. You're taking a strong currency versus a weak currency. That's all you're doing. But when you take strong versus strong, you don't see the market move too much. Let me just say this a bit, and I'm going to go. So look at GU, though. GU, from the beginning of the beginning of the year, look at how it's like still range bound. It's not trending as much as the yen crosses, right? Compared to GJ. GJ is very bullish and up to the right of the screen. Right, let's take a look at GJ real quick. Look how it's up and to the right of the screen. That's a bullish trend. Bullish trend. These are up months, and there's probably one or two down months, but you can almost guarantee after those down months, there's bullishness. When you're in a bullish trend, this is why I said before, there are subtle things you could be looking for. You don't have to find the lower time frame entry idea every single time because it could be difficult depending on who you are and your comprehension on the market. But some ideas when you're in a bullish trend, buy after down days. That's how we were able to get this buy earlier before most people. We're buying as soon as the candle closed down. Right? We took a long here and we lost. Price stopped us out. We took a long again because it was a down close the next day. And now we're in profit and we're holding that all the way back to the month's opening price. So that was the Judas swing, pulling retail traders down short for the month already. We don't need an indicator to tell us all these things because price is telling us. We need to comprehend what it's talking. We got to comprehend exactly how it's showing us what it wants to do. And we're speculating. So even without the price action, we've already speculated that the dollar was going to be much more valuable than Japanese yen based on interest rates. Hopefully you found this insightful. I want to see price continue to take off. Peace.